Welcome to today's Silver Log. And we are back to the 18 SLV level. This number I've been talking about over the last few weeks, especially back around the 14th of July, where it was the level which was significant resistance. With 18, this level was support in the months of June. So we're back to this key important area. Now today I'm not going to put the charts that compare it with the old highs from May, or even these previous highs, which sloped down to 18 and are now about 1797, 1798, most of those key averages, and the 50 was down to 1782. This 50-day moving average is very important. It was below the level on the 1st of July, and it traded in a downward range for the rest of the month. This was the key resistance that we broke today, and the range, you can create a parallel line and create something in this area here for the range that it was in. The low that we made on the 28th was a double bottom, meaning it did not make a lower low, nor did it make a higher low. It matched its previous low. And now we can use some Fibonacci to see where we could be going towards next, both on the upside and the downside. Fibonacci has worked well over the last 4 days. We'll explain that throughout the video, and we'll look at the key Fibonacci now, which will connect today's highs of 1818, which means we are already down 1% from its high to its low today, but we'll take the high from 1818 and the low from 1706. When we take this Fibonacci, what we do is we connect the high point to the low point. If you do this by math, you subtract the two numbers, and then you take the difference and you multiply the difference by both 38.2% and the difference again by 61.8%. You multiply the difference from the bottom, and these are where the levels would come into play. So the next Fibonacci level is 17.75 on SLV, which is roughly about 1804-ish on the silver COMEX. And that's important because if we have any retracements, maybe we stay in this chart through time and then have some sort of retracement back, that's an area you would like to see support. It needs to hold the 1748 area, because usually if you break through the second key Fibonacci level, that's when it becomes a failed move, and the failed move would be this 4-day rally. Now, as far as Fibonacci upside is concerned, you take a range that has significant tops and bottoms, so you take the significant top and bottom that we are using. You take the difference, and 1818 from 1706 is $1.12. So $1.12 multiply 1.618 plus the 1706 number would give us a level price target of 1888 on SLV, which happens to coincide with the previous highs that we made on the 21st of June, or the start of the summer. And now what we're going to do is take a look at this on a 5-minute time frame. And the reason for this is because you can use Fibonacci on so many different time frames. And if we use it from last Wednesday, the 28th, and we connect the Fibonacci with the lows of 1706 and its intraday highs of 1722, the difference of those two numbers would work out to 16 cents. So 16 cents multiply 1.618 to the low of 1706 would be the next key Fibonacci level, which is the 161.8. And we can see that when we use this Fibonacci level, that the high on Thursday was ironically at this 161 level. It retraced, did not find much support at its previous high, but it did find support at its 2/3 retracement at 1716. If we move the Fibonacci up from this low to this high, it worked out to the second Fibonacci level to the downside. So as I was saying, you don't have to hold the first level to remain in a bull market. For the second level is the big one. It needs to hold, and on Thursday, it did that. Now what we'll do is we will move this to Friday, because the next key Fibonacci level is 261.8. How do we know this? We take this number of 1.618 and we multiply it by 1.618, which gives us 261.8. And that's exactly where it gapped open last Friday. If we once again adjust the Fibonacci level, we can see that within this range, it did not get down to the first Fibonacci level, but the range from Thursday and Friday did. However, what is important in this, it was the Fibonacci upside. Because after its run higher, what happened was it had a nice little gain. Let me just bring the Fibonacci back to the Wednesday range. And the next level is 423.6. We know this by taking this number 2.618, multiplying it again by 1.618. That gets us 423.6. And that's exactly where resistance was met on Friday. Very, very interesting. The 50-period moving average became a level of support on the 5-minute time frame, and today it gapped exceptionally higher again. So now what we do is we take 423.6 or 4.236 and multiply it by 1.618. The answer to that would be 685. So I did want to remove it there. So what we'll do is we'll put the Fibonacci back in, and we'll insert the 685 level. So we'll use this level in here, put 685, and we'll see what kind of resistance that it ended up having. I didn't want to go to the 1 minute. Let's go back to the 5 again. And there we go. There's perfect resistance. And I really mean perfect. For the Fibonacci level is 1818, and the intraday high was 1818. So perfect Fibonacci resistance. And like Friday, we are also seeing a level of support on the 50-period moving average on the 5-minute time frame. Very, very interesting information. And if we connect the 2-day range from Wednesday and Thursday, then what happened was on Friday it gapped at the 161.8, found resistance at the 261.8, and then today at the 423.6 was resistance, making the next resistance point on the 685 upwards to 1885, which is the exact same number we came across when we use this Fibonacci together. That's how the Fibonacci works. It's going to always look that way as long as Fibonacci keeps working out. And within silver's charts, and even gold, they work out tremendously. very, very, very well. So I'd like to thank you for watching today's silver log, and have yourself a magnificent day. Bye-bye.